The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good morning from TFNN. Welcome to the April 29th wonderful Wednesday edition of today's opening bell on the Trader's Edge. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope each of you had a terrific Tuesday. Let's make sure that you and we do everything we can to have a wonderful Wednesday. Of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and we make that one little 2x4 shift out there, it means that we can find the gift in every set of circumstance that life is going to toss at us. And that's really what happens when we trade these markets. Universe, the bulls, the bears, the buyers, the sellers, they're always going to throw information to us. It's up to you and to go interpret what that information is, and we can find the good in everything. That's what we're going to do here this morning. Of course, most importantly, though, I want you to know that I'm absolutely grateful for your presence here today. Now, I'm here to serve you, absolutely here to serve you. So if there's something that you need assistance with, something that you're taking a look at, you'd like another set of eyes on it, feel free to pick up that phone, dial in at 877-927-6648. Of course, internationally, you can reach out to us at, reach out and touch someone, 727-445-1044. This is Wonderful Wednesday, of course, Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got Dow futures trading off 133 points. They're trading at 17,924. S&P futures down 14 at 2,098. NASDAQ off 29 points. She's trading at 44.86. Russell 2000 down about 7 points right now, trading out at 12.52. U.S. dollar index back about 290, about 300 ticks, trading out at 95.89. So we got movement all over the place. Gold's back $6. She's trading at 12.07. Silver off 3 pennies at 16.55. Light sweet crude down about 23 cents, trading out at 56.84. I know normally this is where we take a quick peek or what's going on around the globe out here. Well, I tell you what, because I know that we've got Maria in New York that listens to the show, let's at least go take a look at the DAX for it. But we should really get to our markets here and get a grip on what is going on here. So you got the DAX up 175 points this morning. We know that she is taking the short position inside of the DAX. And what she's got going for her this morning, potentially, a lot of time left in the day's trading session, is simply the mere fact that price is now trading down below the B point, the B point of an A to B equals CD to the downside. That is April 17th. What we also know is that price has just simply pulled back into a breakout area inside of the DAX, at least bar-wise. Don't know volume, but certainly a wide price spread, and that was the trading day of March the 11th. So what we know right now is prices just simply come back into that breakout area, the bottom of that breakout area, 11,531. Right now, the DAX is trading at 11,636. Is this swing point? So you've got really two areas being tested. You got the swing point of April 17th. I don't know if that's being tested with stronger volume or lighter volume. If I did, that would give us some kind of a clue out here. And price is also really coming back into the breakout area. So at this stage here, we just know that these levels are under attack, but it does not provide us with any other information as to which way our markets go. I would say if price is well below the 11,531 level, now, it's no reason to close out a short position. It's just really taking a look at what's the message of the markets, and we're taking a look at the DAX first. I guess as long as I'm over here, let's just quick peek at the FTSE. We'll leave Asia till later, and in the case of the FTSE, what's interesting about this, so far the intra-session low today, it's a daily chart that we're looking at. It's been down about 69.58 and 69.51. Happens to be the 1999 breakout level. As long as FTSE can travel above that, it carries with it a bullish message out here, a breakout message, quite frankly. If price gets down below that level, then it's got a whole different meaning. Right now, what we know is, in essence, that area is being rejected. So now let's go take a look at our futures. But let's start off by taking a look at the S&P futures. out here. And here's what we know as we speak right now. And what we've got, what I'm showing you on my screen is just going to kind of getting this all set up here. What we're looking at on our screen here are 4 different time frames. Now, the 4 different time frames in the upper left is the 30-minute chart, and we'll go take a look at wave counts to the downside. We'll go see if there's any kind of price relative strength divergent pattern setting up as it did yesterday. I don't believe that there is. Yesterday's pattern, as the market was selling off, if you're listening to the 10 a.m. show, I was with conviction telling you no. It's not going to happen out here. And in fact, that's the case. Now, when those patterns don't exist, then we have to just simply rely on other things. If we take a look at what's going on at the present time, in the upper right-hand corner is a 60-minute chart. Lower left-hand corner, 120-minute chart, and lower right-hand corner is a 300-minute chart. Let me actually blow up the 300-minute chart just a tad more. And I know that each of you are watching on HD on TigerTV, whether it's on your smartphone device or maybe even the archive. But what we notice right now is that the ES meeting should have some really good support at about the 2097 level. The bottom of the box on the 120-minute chart, the exact bottom is 2097 and a quarter. We're trading at 2097 and a quarter as we speak right now. On the 300-minute chart out here, let me move this. There we go. On the 300-minute chart, we've got bottom of the box 2097.75. So we're trading just slightly below that. Look, if we see price really move down through this area, we're going to see 1, 2, 3. We'll basically see 4 levels, 4 typical roadmap levels of support fail on multiple time frames. Now, on the 30-minute chart, that failed a lot earlier this morning. That took place. That failure began at about 7 a.m., between 7 and 7:30 this morning when price got below the 2109-ish area out there. And that was our first signal for a potential move to the downside. So the market's doing what it really should. Once on the 30-minute chart, it broke through that area. Now what it's done is it's come into an area that should act as support. If it doesn't act as support, the question should be, then where is price headed to? So let's flip over to the daily charts out here. Now, this is a daily chart that has, instead of just looking at the ES Mini, we're really looking at the 4 different futures contracts. So of interest to you with the Dow right now, Dow futures are off, what, 152 points. The interesting thing about this chart as we speak right now is prices come right down to the bottom of a rising price channel. If we expand this up on our screen, it's just a short-term rising price channel. It's just really coming off of the lows here of February 2nd. The price has pulled right back into that area, right in essence into its daily point of control out here in the 17,920-ish range. We'll see if this level holds as support. In the Dow futures contract, if we see price fail here, your expectation should be a move down to about 17,836 as your next touch point. So you're at 17,902. That would give you another 60 points or so to the downside. That's what you should expect if this area here fails inside of the Dow. Right now, what we know, it's up against a level of support. If we take a look at the, let's take a look at the NASDAQ. I think this is probably the chart that has perhaps the most meaning to us as we take a look at its daily chart. What we know is that yesterday, Stevie's had this 200-point consolidation range on his chart screen for quite a while. You're familiar with it. You know that's between the 4270 and 4473 level. Look, we don't need to be exact here. We just need to be pretty close with regard to these areas, these levels. And what we know is that yesterday price got down, tested the old consolidation, which is typically the most bullish thing, when price breaks through a consolidation. Whether it's to the downside or the upside. The most bullish thing is price moves to the breaks out, comes back, tests it, rejects it, and then continues to move higher. Likewise, on the downside, tests it, breaks down below it, comes back to test it, rejects it, and continues lower. At this stage here, inside of the NASDAQ, the information we've got at this stage here, and it's really going to be all about the NASDAQ. I think it's all about the NQ here. It's going to have to make the determination whether it's got the strength to keep moving higher. But you could easily make the case, especially with the new daily profile that just popped up here this morning, price could easily pierce down, get down to 44.62. Maybe as the floodgates get open at 9:30, maybe that's what we see. 44.63 is going to be the level that we want to watch. If that price moves down there, tests it, rejects it, gets back about 44.73, probably it couldn't bust it to the downside. Maybe between now and 2 o'clock, when we see the Fed minutes out here, maybe that's when price just simply gets back towards a break-even-ish thing. So look, if you are bullish, don't have too much of a frown just yet, because you've got certain levels of support that have not failed. And if you're bearish, don't get your don't get your hopes up too high just yet, because you're not seeing significant areas of support fail either. So, just kind of get a feel. Now, let's go take a look at what's going on. So that's on the daily contract. Inside the Russell 2000, it's trading just slightly below. It almost looks like a hammer candle from yesterday. That would be kind of interesting out here. I would say that low of 1237.80 would be a muy importante out there. What we know is that it's trading right into a level of support as well. It's a TAS market profile low out there. Now, if we go take a look at the 30-minute chart, this was the chart yesterday at 10 o'clock that was screaming to us, even as price was moving down, that it wasn't real. Now, what does Stevie mean that it wasn't real? Look, trading, especially intraday time frame, trading life, it's all about psychology. And one of the things that you and I do is we use different tools that help us to understand the psychology of the market out here. I'm going to be doing a workshop a week from a Thursday. That's called the psychology of trading. It's about really being able to put together, and this is to impact not just your trading, but the rest of your life as well out there, because you can't really differentiate one from the other. And when price moves lower, as it was doing yesterday, with less relative strength, just take out the rubber band. It's just the market stretching the rubber band, just really testing you. Testing. Hey, guess what? What you and I know is when it does that, then we have this nice little bullish candle signal that comes in here. It's telling you that the test had failed. So at this stage of the game, we don't have that pattern on the current 30-minute chart out here. It would take, looks to me like several hours, 2.5, 3 hours before that pattern could even begin to form. It may begin again. All we know right now is that prices moved down into the fifth wave to the downside. That's what we're in right now. What I can tell you is that the market has been making, Stevie loves those 7-wave patterns, but that's just one pattern out there. What I really love is when the market tries to fake you out. But you and I use a set of tools that we know we cannot be faked out. We just simply calmly look at what the markets are doing. We read that message and we go from there. Again, at this stage here, what the markets have really been doing as of late. Last week, week before, we were seeing those seventh wave, those seventh inning stretch candles out there, patterns out there. What's happened here is the market's really tightened up. It's tightened up. We're down to basically 5 and 6 waves to the upside, to the downside. You can see here right now as prices coming into the support on those 120, those 300-minute charts out there, even the 60 minutes, if we use the old profile, we're in that fifth wave to the downside. Something to think about. This is Steve Rhodes with TFNN. We'll be right back, folks. Do you know the 7 most critical factors that influence every decision you make, and how not knowing these will jeopardize the health, the wealth, and the relationships you deserve? I'm Steve Rhodes, morning host of TFNN.com, and for the last quarter of a century, I've studied and used the secrets of human growth, the same formulas used by leaders of nations, billionaires and millionaires, and the most successful athletes on the planet. Would you like to break through any obstacle that gets in between you and the success you deserve? Would you like to turn fear into strength? If you could find a way to achieve, be fulfilled, and live a life of meaning, wouldn't you want to know the answer? I'll teach you the factors that control your state of mind and the drivers that impact every thought, emotion, behavior, and action we take in my new webinar, The Psychology of Trading. Join me for this 2-part online event where I'll unveil the secrets to human pattern recognition, because they're not what you think. And soon, you'll have the health, the wealth, and the relationships you deserve. Just go to the homepage of TFNN.com and click on The Psychology of Trading to begin your journey now.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days, and will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
TigerTV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. TigerTV, exclusively at TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow futures off 138, S&P futures off 13.5. Email here from Maria, who says she's closed out half of her position inside of the DAX, and that's how she's going to go into the Fed minutes out there. So for those of you following along with her trade, I have a request here inside the Tiger's Den to go take a look at the GDX, gold, vectors, miners, ETF out here. As we take a look at gold, right now it's off $5. If we take a look at the GDX specifically, nice day yesterday. Volume was 61 million shares to the upside. So what we know about the GDX is the following couple things. Let me just, it's going to be easier. I'm going to turn some of these tools off, then we can turn them back on again. So let's take a look at, I'll leave the volume on there. Relative strength at this stage here, not really helping us a whole lot. So as we take a look at the GDX, number one, there's been an area of resistance in here, and that's that blue line going across my screen, 1994. That was created by that gap to the downside. Remember, gaps are your friends. Gaps to the upside, gaps to the downside. And in the case of a gap, all right, what you're looking for, let's say a breakout session, because we're going to talk down about a breakdown session here, but most people visualize the breakout session a whole lot easier. And when you have a breakout session and price gaps up, you would really love to be able to be in on that trade. You'd love to be able to buy that breakout. Of course, what you're looking for is price to come back to that breakout area and do it with lighter volume. Okay, and that's how you would do that. The same holds true, or the opposite, when you buy a breakdown. Well, in this case here, the breakdown really occurred, okay, with conviction March 6th. But the breakdown really began before that. The breakdown really began before that, either the day before, or what I like to look for, is there a recent swing point that took place within a few days? And the answer to that question inside the GDX is yes. So here's really the breakdown area for the GDX between 1994 and 2148. Now, the cool thing is the GDX yesterday gapped down, or not yesterday, but but its breakdown area had 106 million shares. Yesterday, the move with conviction, the upside was 62 million shares. And it actually closed above, as I mentioned yesterday, I wanted to see it close above that March 5th high, which was, $20.38. It did that. And that has 19 million shares. So price was really moving into that breakdown-ish area with some volume. Even if we take a look at this swing point out here from the trading session of March 27th, that's got 33 million shares. And yesterday, 61 million shares. So what the GDX needs to do to prove that this old level of resistance no longer doesn't exist there, that today it must stay above 1994. If it gives back yesterday's gains out there, then it's not a good thing. It's not a good thing. Let's take a look at A to B equals CD patterns out here. Because if we do that, I got to do this first here. So your A pattern, that's going to clearly be our low down here, March 11th. Your B point, we're going to use the high here from March 25th. And our C point is going to be down here March 31st. So if the GDX, it should get to 2078. I checked in the pre-market, it's trading around 2055 out here, closed at 2053, so no real change there. Your 1-to-1 A to B equals CD says it gets to 2078. Maybe it moves sideways. What you don't want to see it do if you're long the GDXs, close below 1994, that old area of resistance out there. Why? What does that mean? We really won't know till we really see the volume out here. But, what's going to be the influencing factor, what should be the influencing factor in the GDX trade is going to be gold. So that means we've got to go over now. We've got to take a look at gold for S&P and the Tigers Den. If we don't do that, we're doing ourselves a huge disservice. And so what do we have going on as we take a look at the June contract here for gold? As I mentioned yesterday, we talked about it yesterday, and that was that I was not convinced that gold has really broken out. Yes, we have this descending price channel, which we have adjusted, and you need to adjust your horizontal trading ranges. You need to be able to adjust your diagonal trading ranges as well. You've got, as soon as the charts give you more information, that's what you and I are really gleaming for. That's what we pay for. We pay for it dearly with our time, with our money, with our trade ideas out there. And in the case of gold, you and I have been talking about how price has really been held around this $1,208-ish area yesterday, and even though it broke through that rising price channel. What I would caution you inside the GDX trade is as follows. We have not seen gold break out. Yes, we saw gold break out above this descending price channel. But yesterday it did exactly what it was supposed to do, which was just simply trade with inside that TAS market profile box, that little roadmap out there, which, by the way, is set up with a bearish configuration. Stevie says that because when we take a look at supply and demand of the market profile, that point of control, that light blue line, is closer to the red line. That tells you sellers are just really camped out there at 12.15, 12.15.20. That doesn't mean they can't be overrun. But guess what? They have not been overrun yet. In order for that GDX trade to really move higher, you're going to see gold break above 12.15.20. Not break, but close above it. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they just recently unveiled the new 5-year market-safe Future Economies CD. This is a CD that could really deliver, but you have only until May 7th to take advantage. Consider the facts. If the future economy's currencies beat the US dollar over the CD term, you'll get all of the upside. And should they lose? No worries. There's zero downside risk here, as you'll still get back 100% of your deposited principal. Intrigued yet? The May 7th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. We got the Dow off 62 points, trading at 18,044. S&P off 6 at 2108. Composite off 16 at 5,038. Russell 2000 down 6 points. She's trading at 1253. DAX off 189. FTSE off 46. Gold is off $5. Silver up 2 pennies. Light sweet crude trading up 6 cents at 57.12. We got an email that came in that says, Steve, the euro Japanese yen is up and the futures are heavily weighted down at this moment. Could we see some market strength catch up with this carry trade? So let's go take a look at that. And the answer there is yes. In fact, let's first take a look at the currency pairs, and we'll go back to that specific question. Let's take a look at the euro versus the U.S. dollar index, because, you know, it's from this level that we really either see the fall from grace. So to answer your question there specifically, and how we're going to tie it, well, we'll go back to the euro-Japanese yen in a moment. We'll take a look at the euro out here. The euro's been trading in a version of a consolidation. Price really got down to the lows when it tested the March 16th swing point. Never got down to the bottom of the consolidation, but close enough because it hit the swing point. Now price has traveled up to where it has been trading at basically since March 6th. So well over a month, nearly 2 months out here. It's been consolidated. So it's been a frustrating trade unless you're trading intraday on a 10-minute, 15-minute, 30-minute type chart out here for the euro. Been a frustrating trade for folks for over a month. Those that were short and believed that the currency pair was just simply going to continue moving to the downside, And those that were long, thinking that we were going to see the euro bounce off of the bottom. Consolidation, consolidation out here. Now what we can see is price really up against that top. So we don't know whether the euro, as it's paired with the U.S. dollar index, whether or not that's actually going to move higher or not. We know it's up against resistance, and it could begin to falter at any point in time. Maybe 2 o'clock, maybe 2:01, maybe 2:02, something like that. So the euro is not providing us with any information, any other information other than it's up against resistance. If we take a look at the Japanese yen, that's up a bit here this morning. What is it doing? Japanese yen, really continuing to consolidate, whereas the euro's been consolidating to the upside. In essence, with regard to this A to B equals CD pattern, we've seen the Japanese yen consolidate to the downside. This hammer candle still holding out here. So not a ton of information inside of that. Now let's go take a look at the U.S. dollar, Japanese yen. What do we see out here? We see that this is up and is up fairly large. Now, remember, this is a 15-minute delay on this screen out here. But just like the euro against the U.S. dollar, it's trading right into a level of resistance. March the 10th, basically, is that number. And it's right around the 130, 187-ish type range, within some pips, which you can see price, in essence, has moved up into that area. So with the futures trading lower, and it's an absolute excellent observation. For those of you that were short and were not paying attention to this, you've got to say why. Because this currency pair, which is the carry trade as far as what goes on inside our markets out here, is one of the better tailwind, headwind indicators that is out there. If you believe that currency rules the world, then you've got to pay attention to this currency pair out here. It's got to influence you. That's really why the question came in. And if we take a look at the 1-minute chart out here, just to point this out, our man K. Rico had called in about this a while back, and I believe he was looking at the 1-minute chart out here. You can see really the correlation. And when things come unglued, the bottom chart, by the way, is the euro Japanese yen. It's a directional correlation. I wish it were more than a directional correlation. I wish it were a pip for pip kind of a pip for tick kind of a deal out there, but it's not. It's directional. And it took me a while to really learn that out there. But once I learned it, man, it is cement in stone out here that don't get too carried away with it. What you want to understand is that it's a directional aspect. And I've watched these tug of wars. I've watched these battles over and over and over and over and over again. Did I say over again? And when there's a divergence, who wins the battle is the currency pair. It happens all the time. Now you got to use other patterns out there and other benchmarks to be able to help you understand, where there's other levels of support or or what have you. And that's really why when we began the show this morning, while we were taking a look, hey, let's go take a look at these four time frames for the S&P futures, and let's go take a look at where support is at. And when you put that together with what the euro Japanese yen was doing, and so thank you very much for the email out there. It's the whole reason why, at least in my newsletter service, we didn't go short this morning. Can you imagine if we went short at the open? It would be getting crushed right now because the information was just no. You got that. Remember, we talked about just simply on the 30-minute chart. I know most people don't want to trade a 30-minute chart out there. God bless you. It doesn't make any sense, but we're in a market that hasn't moved anywhere for 4 solid months now. The Dow is basically within a couple hundred points. Now, it has moved a ton to the upside, a ton to the downside out there. And that's where I think you've got to take off your bullish mask and your bearish mask, because that's not really what you need to be looking at this moment in time. This is not about being able to try to call the market as a bearish market or a bullish market. If you're doing that, why? How can that possibly be? How can that be? The market hasn't done anything for 4 months. We've been in a favorable seasonal cycle. We're about to go into the unfavorable seasonal cycle. I say the pattern that's in play out here is these consolidations, and it is these shorter-term timeframes. And it really proves the point that right now it is about picking stocks. This is a stock picker's market out there. What you have to do is you have to realize we're in a consolidation. You got to find the time frame that you're most comfortable with. And if you're not comfortable on an intraday chart, man, there's nothing like cash. There's nothing like being on the sideline in a market where it's just simply been churning, because you could get frustrated as all holy heck. You might think that the market is going to go ahead and get crushed to the downside, and then, only to see that get swooned away from you. Not sure what that means, but you know what I mean. Likewise, the market starts to crack the upside and you get all giddy out there, just to find that rug carpet gets pulled from you as well. So the markets have done diddly. Really, they've done a ton for intraday traders out here. And they've done a ton if you can be a stock picker. Example of being a stock picker, I suppose, being able to pick bottoms, pick tops, things of that sort out here. Let's just go take a look at what's moving. If we take a look at what's moving here this morning, in the marketplace out here. If we take a look, it's Buffalo Wild Wings to the downside, Biogen to the upside, GoPro up 13% to the upside this morning. Let's just look at a couple of those. Let's look at Log Me In, LOGM is the ticker symbol, up 13%. Out with numbers, yeah, they're out with numbers. Let's go take a look at it. So what could we use as far as tools with regard to Log Me In? Log Me In, here's a nice looking stock chart. I mean, this has been moving to the upside. There's been nothing here that would indicate to you or me. Let me just put it back on a monthly chart. Let me just make sure. It looks like we're at 52 or all-time highs, not just 52-week highs. But let me just put it on a monthly chart out here. Yeah. So this is this has been a thing of beauty off the lows back here in 2013. If we take a look at the daily chart out here, it's been holding the support of its market profiles. It broke through one level back here. Looks like back in the early part of December, but began holding them again during this accumulation phase back in the end of December, in the February timeframe. Nice wide-ranging bar, a nice volume breakout as well back on February 13th. Now, where's this stock going to? These types of patterns out here, really difficult to say. I don't think there's a solid A to B equals CD pattern out here. There's not. I take that back. There he is. There's an A to B equals CD pattern. So if we take a look at a price projection on Log Me In, I'd say that you're looking at about a price projection here. Let's hit the 1-to-1. This morning, 68.51 is the level, but it's coming in with a wide-ranging weekly bar out here. I don't think that that's over. I think Log Me In wants to head to about the $77.06 range out here. Likewise to the downside, Buffalo Wild Wings. Buffalo Wild Wings, BWLD, off $20 right now, 162.98. This thing is, this is the weekly chart. Let's stay on the weekly chart just for a moment. Buffalo Wild Wings, has an A to B equals CD pattern. Didn't hit that projection. Maybe it's not going to hit it at 205.78. If we take a look at volume, what Buffalo Wild Wings is dealing with is the trading week of October 27, 2014. No big, that's coming off those lows in our market around October 14. So it looks like Buffalo Wild Wings may be headed back into that area. It's broken through a weekly unfair low, that TAS market profile support area. I suppose we're going to see some huge volume today. Let's switch to the daily chart here for Buffalo Wild Wings. So far, 461 million. Let's see if there's any chance of finding any support. And the answer is, yeah, there is. Buffalo Wild Wings ought to find support. Remember, gaps are your friends out here. And the area where Buffalo Wild Wings ought to find support, 136.60, 143.86. Both those areas have not been tested. Until they get tested, we won't really know if those are areas of support. But that's where this equity broke out. Volume today, 470,000 shares thus far out here. It's got these nice high volume highs on a daily basis that really haven't been tested out here. So maybe Buffalo Wild Wings, isn't totally over to the upside out here. But it's, with a gap down like this, is it a buyable area? No, it's not really where you'd want to buy it. You'd want to buy it around 136.60. Maybe 143.86 out here. So, this market for this calendar year has been nothing more than, from a longer intermediate term trader, truth is, this has been a market where you've had to go out and you've had to try to find stocks that are going to break out to the upside, or from a shorting side to the downside. Because when it comes to the indices, you've got to be making your decisions based on 30-minute charts. And I think you've got to use all the tools that TFNN has brought to you. Hopefully, if you've not been touched by the Chapman wave, you got to ask yourself why. So hopefully you attended that workshop last night out there. If you have not been touched by the Rhodes momentum indicators out here, where price one of those indicators where price stretches to one side or the other side out there, you got to ask yourself why. It's called every major top going back into the 1900s out there. It's called most of the bottoms, but it's called every major top. It's called it's giving you the warning signals before a market crashes out here. It's the most consistent pattern I have seen. And I've checked many of them, not all of them, because like yourself, I'm always out there looking for new pieces of information. I mean, let's face it, many people think that our growth, stops when we graduate from high school, or when we graduate from college, or maybe when you go on and you get some type of additional degree out there, right? Take a look at our learning curve. Goes from, you talk about the A to B equals C to D point out there, the lightning bolt pattern. That's just your A to B, from birth to college, if you've got a form of a college degree. And then basically do some retracing. You should never sit on that, because if you're not growing, what happens in the universe, right? If you're not growing, you're dying out there. So our learning curve, just imagine if we kept up that pace from that learning curve standpoint. That's really what I think is really the most beneficial things that we have here at TFNN. Look, my opinions are going to be my opinions, and they're going to be influenced by the way that I see the charts out here, which are going to be totally different than everybody and anybody else, and it should be, at TFNN. This is not a CNBC or a Bloomberg or a Fox Business News where we're going to tote the line out there. It just ain't going to happen. Thank goodness. Thank goodness that Tom creates that environment where we don't have to do that, and we can have different viewpoints out there, and I really think that's really a benefit to each of you. In any event, here, enough of my little soapbox. Not really much of a soapbox. It's just really the truth. The truth. I mentioned yesterday inside the Tiger's Den. This is kind of interesting. The XLK, as we take a look at clues. Now, the XLK, the technology sector, is the largest weighting inside of the S&P 500. I don't remember the percentage, but it's like, 20%, 21, 22%. At least it had been. I haven't looked at it for several months. But if you go to Spiders, SPDR, you'll be able to see exactly what the weighting structure is as of last night. And if we take a look at the swing point here, now this is we know that Apple is a large weighting. So inside the XLK, I don't know, you got Apple probably, you got Microsoft, Google, stocks like that. Cisco, perhaps, and go look it up yourself. It's really easy to do that. But if we take a look at the swing point, which is March the 2nd, it's got 6.8 million shares out here, 43.46. Yesterday, the XLK was pushing into that swing point with 9 million shares. It didn't close above it. If it had closed above 43.46 yesterday, you would have had a confirmed A to B equals CD to the upside. That says the XLK is going to take you up to 45.01 out there. All that yesterday's move was telling us was basically 43.46 was going to be tested again, because you were moving into that swing point with volume. So far, the actual high today has been 43.44, so we're 2 pennies away. It's pushing into that swing point. Volume so far this morning, 883,000 shares. Thank you, Z. So you got Microsoft, IBM, all inside of the XLK out here. If the XLK busts through this, because of the weighting inside the S&P 500, like 21% or so, the S&P is going to have a real tough time, careening to the downside out here. These stocks are going to have to fail. But that's what's going on inside of the technology sector. That's what's going on inside the XLK as we speak right now. The XLV, here's where your tug of war is. The tug of war is because the XLV is number 2 or number 3. XLF is up there as well, and I don't know what which one it is. In the case of the XLV, I think the only thing that we can really say about the healthcare sector at this stage is that price is traveling in its own version of a consolidation, which is in between the TAS market profile box out here. What a wonderful tool that John Logan has provided to us. I mean, what a wonderful tool. In addition to the swing points, we understand other levels of supply and demand. This says support inside the XLV 71.74. You crack that, and you start running into problems. We'll be right back.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Do you know the 7 most critical factors that influence every decision you make, and how not knowing these will jeopardize the health, the wealth, and the relationships you deserve? I'm Steve Rhodes, morning host of TFNN.com, and for the last quarter of a century, I've studied and used the secrets of human growth, the same formulas used by leaders of nations, billionaires and millionaires, and the most successful athletes on the planet. Would you like to break through any obstacle that gets in between you and the success you deserve? Would you like to turn fear into strength? If you could find a way to achieve, be fulfilled, and live a life of meaning, wouldn't you want to know the answer? I'll teach you the factors that control your state of mind and the drivers that impact every thought, emotion, behavior, and action we take in my new webinar, The Psychology of Trading. Join me for this 2-part online event where I'll unveil the secrets to human pattern recognition, because they're not what you think. And soon, you'll have the health, the wealth, and the relationships you deserve. Just go to the homepage of TFNN.com and click on The Psychology of Trading to begin your journey now.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Basil Chapman has just announced 2 live workshops that he'll be hosting April 28th and May 5th that only subscribers to his opening call will gain access to. On April 28th, Basil will host a 45-minute live online workshop, The Essentials of the Chapman Wave, where he'll teach the basics of the Chapman Wave notation that Basil created and uses daily in his trading and newsletter recommendations. On May 5th, Basil will host a second 45-minute workshop where this time he'll revisit the 1929 market comparison webinar and provide his attendees with an updated take on the socio-economic trends Basil has spotted currently taking place. If you're an opening call subscriber already, then your seat is already reserved. If not, then sign up for a 30-day free trial to the opening call today. You get a month of Basil's daily newsletter, The Opening Call, along with 2 live workshops coming up. Don't miss out on this offer. Sign up for Basil Chapman's opening call newsletter today on the front page of TFNN.com.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Welcome back, folks. Dow's off 32, S&P is off 3. So let me tell you what the bulls need to be watching for, what the bears need to be watching for today, buyers and sellers. We're going to go back to that euro-Japanese yen. So here's what we know. Directional correlation, price is now right up against an area of resistance. If price inside the euro-Japanese yen is not able to take out 131.87, it'll be turned back from this area, and it'll start heading back down towards that 126 level. If it does that, that's where we ought to see directional selling pressure to the market out here. So if you are a bull, you need to see price. You need to see the euro Japanese yen continue to move higher and break out of this consolidation. And quite frankly, it would move out between it would have a measured move equal to between 127 and 132. So you've got $5 out there. That's what you want to see. If that doesn't happen out here, then you're going to start seeing a real headwind to the bullish side and maybe a tailwind to the bearish side. If we take a look at presently right now at 955 summation index price oscillators for the New York Stock Exchange Composite and Dow, well, they're all below zero. The Dow is really, we're going to call the Dow is really on the goal line out here. So the Dow is neutral. The New York Stock Exchange ain't so neutral, and the NASDAQ Composite is definitely not neutral out here. So that says sellers are in control as of 9:55. And that's even with the market being off just slightly out here. So that is something, as far as a bull, you need to see those price oscillators get back above the zero line. From a bear, you want to see things stand below that. Of course, overall, it's going to be about that VIX index out here. The key level is going to be 1428. If the day ends, if the market responds poorly to the Fed, 230, whenever it actually is, or whenever the market responds, let's say by the end of the day, if the VIX index is above 1428, now it might be a one-day rate of change greater than 10%, but if it gets above that, that's where some real carnage is going to be in the marketplace. Even if you are a intermediate term player out here, you've got to know that that's where the carnage would take place. Otherwise, it's a market that chugs sideways to higher out here. So that's what you should be looking at from an overall picture. And folks, if you're off to start your Wednesday, thanks so much for spending time with us here at TFNN. We absolutely love you being here. Stay tuned. Tom O'Brien will be up next. He's going to give you his take on the Market Minute, and then I'll be back with you for hour 2 of the Trader's Edge. Have a great Wednesday, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.